Namaste and welcome to another episode of the Bharat Varta podcast. I'm Roshan Karyappa, and today in the studio we have Neil Borate, who is a journalist with the Mint and also a newly published author. He's written this fantastic book on Rakesh Jhunjhunwala, the Big Bull of Dalal Street. We're going to talk to him about his articles on personal finance, which I really enjoy, and also this very interesting book. Hey Neil, welcome to the podcast. Thank you so much for making the time.
Thank you for having me.
Yeah, so I'm a big fan of your articles. I read them almost on a weekly basis, and we'll talk about that. But how did the book come about?
So, there are two reasons really. One reason is that to me, if there is any one person, if you close your eyes and you have to think, name one person who symbolizes the Indian investor's dream, it would be Rakesh, clearly. The more immediate trigger was his passing away last year, and there was a surge of interest in him and his life. And we thought, who better to document? And the funny thing is, there's been no serious attempt before to write a biography of India's greatest investor.
I think there was this one book called The Wizards of Dalal Street, which briefly mentions him,
Yeah,
right, along with
yeah.
a bunch of others.
Correct.
But you're right. I mean, there is nothing of a biography as such. I also like how the book is put together. As I was saying, right, I mean, it's not a pure 100% biography. So a third of the book talks about Rakesh's life, and then the rest of the book delves on some of his hits and misses, what he got right, the things he didn't get right. And then, finally we end with what you can learn from him, right? So was that also like a conscious choice to sort of focus on value for the average investor?
That's right. So we focus on not only what you can learn from him, but what you should not learn from him also. Because there's a bunch of stuff that he did which the average investor should not emulate.
Yeah.
So you're right. It was meant to deliver value to the average investor.
So in your opening comments, you said Rakesh is perhaps the investor, right? I mean, the hallmark of perhaps one of the greatest Indian investors. And he's such a larger than life figure. His interviews were something that I would really look forward to on various business TV and so on. But if you were to step back and talk about him as his significance, right? I mean, what is his significance in India?
His significance is that anybody without a grand inheritance can, through dint of skill, luck, make it big, really big in the stock market. So if you think of him starting out with 5,000 rupees, ending up with a fortune of more than 35,000 crores, it's one in a million. I don't know, 1 in a billion people who can achieve that kind of track record. Now, of course, there are ifs and buts, there are holes along the way. So, for example, although he began with a very small personal capital, he did borrow money from his brother's clients. His brother is a CA, and that gave him an advantage. But all of us, nobody's perfect. All of us have some advantages, and we lever them up to make more of ourselves.
Right. But yeah, I mean, it was also highly leveraged as well, right? I mean, yes, I mean, he got started with that 5,000, but it was highly leveraged. And he made this money over a period of 25, 30 years, which is also something fantastic.
Absolutely, because if you work out what the CAGR was, it is. I mean, I have to go back and check the figure, but I think it's some insane in 30-something%, which nobody can get.
Yeah, that's crazy. And I think, often the media called him the Warren Buffett of India. But I think if you think about just in terms of time invested, right? I mean, Warren Buffett has been in the market for, I think, 70 years or something. I mean, he's probably closer to 95 something right now. He's been investing since the time he was 15 or 16. So he's been in the market for maybe 3 times, 2.5, 3 times what Rakesh ji was, right? So that's an unfair comparison, I would say. And also, he was such a heterodox, right? I mean, he's perhaps one of those few people who could invest and trade.
Yeah.
Right? And the mindsets for each of these is so vastly different. I mean, anyone who has, tried to do either of these will tell you that it's very, very different, right? How did he do this?
So, in fact, the funny thing is that he could invest and trade in the same stocks, which is like the next level of craziness. So how did he do it? So he himself would explain it by saying that his trading style was all momentum, as is the case with most traders, I think. Whereas his investing style was value driven. That's when he would go talk to the company managements. He would look at the valuation of the stock. He would look at the prospects for the company, the moat of the company. But when it came to trading, it was whatever's trending in the market.
Yeah. I mean, and he had this of his many sayings. I mean, Bhav Bhagwan che, right? I
Yeah,
mean, he would say.
correct.
So what you buy is important, but at what price you buy is a lot more important. But yeah, I mean, it's baffling to me that how you could invest and trade in the same stock. You talk about a few of his greatest hits, whether it's Titan, Crystal, and the rest, right? What did he have like a framework for evaluating some of these stocks? Because some of his decisions were very intuition driven, right? I mean, it was very intuitive. Like he's quoted to have said, invest first and investigate later on some of these things, right?
And he did with Titan, for example, to his great benefit, and with DHFL to his great detriment. He met the promoter on a flight, and within a few hours, he seems to have made a decision there. But in terms of his style, so we've written it out in the book in some detail. Just to summarize in 2 points, is essentially this: that he would look at the scope of the company to grow. He won't go for mature companies. Like he would want companies that
Small
have
caps and so on.
lots of runway, and whether there's a moat, there's something unique that will take the company there.
Right. And that's it, right?
That's it. As simple as that.
Do you want to talk about, I know you mentioned this in the book, but do you want to talk about, for instance, give an example of, let's say, Titan or Crystal?
In terms of exemplifying this approach, so Titan gets interesting because the legend has it that he went and bought Titan in 2002 when it was at a multi-decade low, 32 rupees, and then held it for a long time. So this is probably true, but not the whole truth. Because we found an article by in the Hindu business line by a Titan executive, which said that Rakesh was an investor in Titan way back in the 1990s when it was going nowhere. And back then, Titan had a foray in Europe. They were only selling watches. They had not pivoted to jewelry. And they were not making substantial profits. But he seems to have held on for all those years. And it shows us that he was more patient than we think. I mean, as it is, buying in 2002 is a lot of patience, but it's even more than that.
Yeah. And he continued to buy, right? I mean, maybe starting out at around the 30 price mark, he also went up to 100, 150 and so on. And famously held it till it went to maybe 2,700 something, right?
Yeah, even at his death, Titan was a huge part of his portfolio.
Yeah. That's something that, I mean, I keep coming back to it, right? I mean, as a trader, you must feel that itch, right? That itna sara, I mean, you have gained the, valuation on that, right? How can you still hold on? But that's something amazing about Rakesh, right? I mean, he did that for multiple of his stocks. In fact, the best of his stocks. Yeah. And, I mentioned, Warren Buffett as well. But if you compare him with, let's say, George Soros or Peter Lynch, any of the, legendary investors as such, I think his story is unique in the sense that he was investing obviously in a very sort of different market, right? India, I mean, the US is a lot more mature, way bigger than India. And so the amount of money that you could make here as well in comparison to the US was very different. But any other characteristics that kind of set him apart from other investors?
So there are different things that he did at different points of time in his life. In the early days, I think being in Mumbai, being in physically close to the stock market, conferred some advantages. He would say that he would stand outside the market and not tell people that he was an income tax officer's son for obvious reasons. And that's around that time he met his mentor or his guru, Radhakishan Damani, and also Ramesh Damani, who had come back from the US. And that in those early years, he was taking those super aggressive trading bets. So he was a different person in the 1990s when he was going up with Harshad Mehta bull market, then shorting it. Then in the late 90s, doing nothing because the market did nothing. And even when the tech boom came, finally, he did not participate. He didn't understand tech stocks. So it's difficult to sort of draw one sort of strand which says this is him and different from others. It is him doing different things at the right time in the market.
Yeah, I think his quality of doing what is necessary, right? I mean, given the circumstance, was the greatest thing. Like you mentioned, I mean, for a large period after the whole Harshad Mehta thing, I mean, he was quiet. Then from the 2001 to the period after that, I mean, he was again, sort of, he had made a few bad bets and he was again under the radar per se, right? So it's not like someone who is like compulsively acting on every piece of information and so on. So I think he also, I think, in many of his interviews, he recognized that the market is like,
His boss.
is the boss, right? No matter what you think about it. You mentioned, Radhakishan Damani, of course. He had all these legendary friendships as well, right?
He did.
And that really informed his opinion on a few things. And it's like he was a trader, investor, and also, I mean, he was an entrepreneur with Akasha, right? I mean, sad that he didn't sort of
Correct.
live to
Correct.
see it through.
That's right. And the funny thing is that these friendships, although they were strong, you don't see too many similarities in the portfolios of Radhakishan and him.
Very different, yeah.
And Radhakishan's fortune came from DMart. It didn't come from making big investments in the stock market.
Right. To summarize, what can the average investor learn from Rakesh Jhunjhunwala?
So I would say two things. One is that his incredible long-term outlook. I mean, now it's become popularized. We think superficially it's easy to stay put, but you have to fight against yourself, and that's the hardest battle to fight. And he seems to have conquered himself in that direction, as the Titan example shows, right? There from the 1990s. The other is bullishness on India. This gets a little complicated because we often mix our political views with views on market, and personality comes in. So I am, for example, almost a pathological pessimist. So I can't hold too much equity in my portfolio. But Rakesh had that crazy optimism.
Yeah, 98% of his wealth was in
Yeah,
equities.
yeah, correct.
Insane.
Correct. And he had it at a time when there was no real reason to be optimistic about India. 2002, what was India doing that was so different? We were just coming out of the dot-com bust, actually, because by then the tech bubble had crashed. So in India, the version of it was the TMT, tech media telecom boom, and that had crashed. So he was optimistic through it all, and you have to give him credit for that.